So last time we did was for-profit organizations, right? Now we will be doing not for-profit organizations. So for-profit organizations, we did balance sheet, we did income statement, we did cash flow statement, right? These were the major statements for profit organization, where the main aim of the organization was to earn profits. Vis-a-vis, if we talk about not-for-profit organization, these organizations are the main goal for these organizations is not to earn profits, but it is mainly for the welfare or some other objective other than the profits, right? So there can be not-for-profit organizations like hospitals. So main goal for hospitals is to treat their patients, right? So hospitals and other health clinics are there, colleges are there, uh, normal health welfare organizations are there, like WHO, right? Well, health and welfare organizations are there. Social clubs are there, labor unions, right? And so many such with different objectives. There can be not-for-profit organizations, not for the profits, but for the welfare of the society, right? For these, if we talk about the financial statements that we need to focus on, because generally not-for-profit organizations' main focus for presenting the financial statement is to present the basic information, like what as a whole they are doing, right? Vis-a-vis, if we talk about for-profit organization, their main goal is to show whether the profits are correctly reported or not. But here, we will be mainly focusing on from where the money is coming in, because it is not a pure sale, but it will be like a contribution from the donors, right? And where that donated amount is either invested or spent should be the main area of concern in preparing the financials. So these three statements will be there, although the name nomenclature is a bit different for this. Like for balance sheet under not-for-profit organization, we use statement of financial position. For income statement, we use statement of activities. For cash flow statement, it is cash flow statement or statement of cash flows. Statement of cash flows. And there is one more statement that may be reported separately or in the notes of financial statement, which is statement of functional expenses. So here we will be covering all the expenses that can be there for the function of the not-for-profit organization. Okay. So these are the main four statements that we will be discussing or learning about. Now, before moving ahead, we should know a basic information about certain things that are part of these statements. Okay, like first and foremost is contributions. So obviously the not-for-profit organization will run through the contributions made. Right, contributions means the one which has been it's kind of revenue for the not-for-profit organizations, because this is something which is provided by the donors. However, these contributions are known as non-reciprocal receipts, because as a not-for-profit organization, you are not giving anything in exchange of the amount that you are receiving. In for-profit organization, sales is reported only when you give them like any goods or services in return of money. But here you're not giving anything, you're just receiving either in the form of uh, cash or in the form of any other assets or in the form of services. So whatever you are receiving, that becomes a non-reciprocal receipts or the contribution revenue, basically. Right? Now, contribution revenue generally, if it is cash, then whatever cash is received, that will be the contribution revenue. If it is a property, or if you have received the amount and you have given up that amount for maybe exchange, or to give to you may have used it for something, right? So we will discuss how it will be used. So the contribution revenue in that case will be, first of all, you need to calculate the fair value of the amount received, or the asset received, or the services received, fair value of the contribution received, I would say. And you will subtract the fair value of resources given. Resources given up means whatever you have received out of that, if you have given up to, like maybe if, let's say for example, you have received the clothes and you have given those clothes to some poor people. So you will be reporting contribution revenue of the fair market value of those clothes, and whatever out of those clothes, whatever you have given up to the poor people, the fair value of that will be subtracted. So that will be the main contribution revenue for the not-for-profit organization, right? And not exactly the fair value of the contribution received. Okay. Now these contribution revenue can be restricted by donor or without restriction. So there is with donor restriction or without donor restriction. Restriction means donor will pay you the certain amount and ask you to either like there can be different types of restrictions, like for a specified operating purpose. Like this needs to be for a specific purpose or a specific program. This the whatever they have donated needs to be utilized, right? Maybe winters are coming, so many donor may ask the society or they ask the NGO people to donate these to only this specific segment of the people. So those are restricted. Or maybe something like you have given the donation to a society for like maybe for building a cancer hospital. So that is a specified purpose or specified program, right? Then Donor restriction can be based on specified time. Specified time needs to be elapsed. So time restriction is there. Like for this particular time period, you cannot use. After completing this particular time, you can use them. Maybe you have asked them to invest my donation to fixed deposit for 5 years, and then you can use it. So for first 5 years, you cannot use it. You may use the interest income, but the principal amount should be used after 5 years. That way you can like give the time restrictions. Then restrictions as per acquisition or construction of capital asset. Like you have given the money to construct a capital asset, a building or like a lab or anything. So it is an acquisition or construction of the asset restrictions. Then lastly, it can be restriction that is not available for expenditure at any time. That means that money you cannot spend anywhere. You have to invest that money, and whatever amount you are earning from that money, only that you can use. So these are generally known as endowments. Endowments means donor have restricted you to use that money throughout the life. You cannot use that money, but you can invest that money and earn whatever earnings you can get and use that earnings for the running of the or the functioning of the not-for-profit organization.